Welcome to the Explainer. All right, let's jump right into the wild world of Dogecoin. We're looking at a complete 2026 market analysis for an asset that literally started as an internet joke and somehow morphed into a highly volatile, multi-billion-dollar heavyweight. If you've been anywhere near the crypto space, you know this one is impossible to ignore. So let's break down the true investor outlook based on the hard data.
Here is your 2026 Investor's Blueprint. We're going to cover the origins of the meme coin, that brutal 2025 reality check, the winners and losers today, the bull case, the bear case, and finally, the verdict. Let's get to it.
Section 1. Origins of a meme coin.
You know, it's actually kind of mind-blowing to look back at this timeline. Back in December 2013, software engineers Billy Marcus and Jackson Palmer literally designed this token, complete with a goofy Shiba Inu dog logo, to poke fun at all the wild crypto speculation happening at the time. It was a joke. But then, it slowly gained real organic traction as a way to tip people on Reddit and Twitter. And then, 2021 happened. Elon Musk and other high-profile figures started vocally supporting it. And bam, it breaks completely out of the niche internet forums and hits massive, mainstream global recognition. The joke became very, very real.
But we've got to look under the hood here, because while it started as a parody, it isn't just made of thin air. It actually shares its foundational technology with Litecoin. It's a legit open-source, peer-to-peer cryptocurrency. However, and this is a massive however, its supply economics are entirely different from something like Bitcoin or Litecoin, which, as we're going to see, completely changes how you have to treat it as an investment vehicle.
Moving right along. Section 2, the 2025 reality check.
So let's talk about the so-called meme coin supercycle. Because man, what a roller coaster. In early 2025, riding high on the post-Bitcoin halving euphoria, a tidal wave of retail money flooded right back into risk assets. Dogecoin surged, testing those upper resistance levels. But, well, look at step 2. That momentum just wasn't sustainable. The macroeconomic picture got tough, liquidity drained out of the speculative markets, and by late 2025 into early 2026, the asset was just bleeding value. The whole global market narrative completely pivoted away from memes and went hardcore into actual blockchain utility and real-world asset tokenization.
Which brings us to Section 3, Winners and Losers Today.
Let's see where the money actually went, right? Because the ledger here is sharply divided. If you time the market, yeah, there was serious money to be made in all that chop. Buyers from before 2021, they are still sitting incredibly pretty. Same goes for active swing traders who snagged those double-digit bumps in early 2025, but on the flip side, the losers. If you bought into the extreme hype near the all-time high of 73 cents in 2021, or at the local tops in early 2025, you are nursing some brutal paper losses right now. We're talking folks down over 50%, basically just holding their breath and waiting for the next major cycle to try and break even.
This leads to a really crucial point, an explicit shift in mindset. You absolutely have to understand what it is you're holding. Analyzing Doge means you are evaluating sentiment and psychology, not traditional tech fundamentals. If you buy in, you are not betting on some groundbreaking technological frontier. You're betting on the crowd. You're betting on human psychology, community strength, and pure market momentum.
All right, let's objectively look at the upside. Section 4, the 2026 bull case.
The bull argument for this year really comes down to 4 powerful pillars. First up, brand recognition. When retail investors finally step back into the crypto market, Dogecoin is very often their literal first speculative purchase, simply because everybody knows the name. Second, base support levels. Technical analysts are seeing the asset test historical support levels right now, levels that acted as massive launch pads in past cycles. Third, we've got whale activity. The big players, the large wallets, they're quietly accumulating during these quiet periods, which tightens up the available supply. And fourth, the Elon factor. The lingering potential for sudden payment integrations on X, formerly Twitter, is huge. Any of these could act as a massive catalyst and instantly ignite a price spike.
But we've got to balance the ledger here. Section 5, the 2026 bear case.
I want you to look at this number and really let it sink in. 10,000. That is the exact amount of brand new Dogecoins mined every single minute. Not every day, every minute.
And that right there is the first massive structural risk, infinite supply inflation. Because 10,000 coins are entering the market every 60 seconds, this asset requires a staggering, constant influx of new buyer capital just to keep the price from dropping. Second risk, lack of utility. Let's be real, you aren't paying your mortgage with Dogecoin. There's no native DeFi ecosystem, no smart contracts, absolutely zero technological moat. It relies 100% on speculative hype. Third is the attention economy. The meme coin space is wildly saturated in 2026, and Doge is constantly bleeding retail attention to newer, trendier tokens on blockchains like Solana and Base. And finally, high volatility. These assets are insanely vulnerable. If the global economy tightens up and liquidity drains, meme coins take the hit hard.
Which brings us to the moment of truth. Section 6, the final verdict.
As of May 2026, the asset is trading at a heavily discounted 11 to 12 cents. It's sitting squarely on those critical, long-term support levels we touched on earlier.
So here is the crystal clear warning from the analysis. This is absolutely not value investing. It is a high-risk, high-volatility, speculative asset. Please do not treat this as a safe store of value or a core piece of your portfolio. It is strictly a momentum play based on hype cycles. Now, yes, it might offer a really lucrative entry point for traders who can stomach the extreme chop and are willing to wait for a celebrity catalyst, but you have to follow the golden rule of crypto. Only allocate capital that you are fully 100% prepared to lose. Which leads us to the single most critical takeaway for this explainer. If you do decide to step into the incredibly volatile arena of meme coin momentum trading, the most important question you need to ask yourself before the next explosive spike even happens is this: what is your exit strategy? Because in a market driven entirely by human psychology and hype, having a rock-solid plan to take profits and get out is quite literally the only way to avoid ending up on the wrong side of that ledger. Keep learning, stay objective out there, and we'll catch you in the next explainer.
Thank you for watching this video. Please subscribe this channel.